Hi guys, this is Chauke. I'm a professional teacher for accounting. If you're watching this, you're definitely at that place. Please make sure that you hit that subscribe button down there, and I promise you that you'll make your accounting problems a thing of the past. With that out of the way, let's get into the lesson. In this afternoon's lesson, we're going to be looking at the income statement. This was strictly taken from the Gauteng Department of Education's SBA for grade 10 accounting, and we are only going to focus on the income statement. It's out of 50 marks and should be done in approximately 58 minutes. Now here they're saying that Ellis Furniture Shop is located in Annandale and is owned by Joanna Ellis. She sells furniture to local community on credit and for cash. A profit markup of 50% is added to the cost price. Now what they mean here to us is that in order for them to determine the selling price, they take their cost price and they add 50% of that particular cost price. Now we know that according to what we were taught in grade 9, our cost price is always 100%. And this case, in this case, our profit, they're saying it's 50%. And we also know that our selling price is equals to cost price plus profit. So in this case, it means that our selling price percentage will be 100 plus 50%, which will be out of 150. Now the reason why they gave us this markup is because we are going to need it somewhere as we do our calculations, so you need to keep it in mind. Okay, next they're saying that complete the statement of comprehensive income for the year ended 28 February 2023. Very important for us to know when does our year end and when does our year start. Okay, now the first instruction, or what we need to make sure that we do first, is to insert everything that is in the nominal account under the income statement. Remember, your debit side, in this case the debit side here, it will represent your expenses, but remember our expenses are divided into different categories, and then the credit side in this case will represent your incomes under the nominal section. Very important for you to make sure that you highlight this information. So we're going to start by entering the information that we have. Our sales is 1,280,000 and it has already been entered for us. Our cost of sales is 640,000. So whatever that we enter, I'm going to tick. So our cost of sales is 640,000. So I'm going to open that bracket and say 640,000, and then from there we can check what is the next thing that we are given. According to here, we have the tax allowance for 12,400. Remember, the tax allowance should always be closed off to sales, so in this case we're going to say minus 12,400. okay, and then next we go to the next one. The next information says that we have rent income, which is an operating income for 179,550. So we're going to have rent income here. Rent income for 179,550. Okay, and then once we are done with this, we move on to the next one. We have interest on fixed deposit for 4,200. so interest on fixed deposit as part of our interest income, so here's that 4,200 there, and then from there we need to check what else do we have. Whatever that we have entered, we are going to tick. We then have discount received for 3,100. remember, discount received is part of your other operating income, so we'd say discount received, and then our answer is 3,100. and then from there we move on to the next one. We have water and electricity for 35,400. this was already entered for us, and then we have advertising for 30,000, which is an expense. So under advertising, because they already entered it for us but did not enter the amount, we are going to put it here as 30,000 here, and then from there we proceed to the next one. We have bad debts for 11,300. so I'm going to write that bad debts here, bad debts, and then 11,300, and then from there we go to the next set. We have salaries for 184,000. so that salaries will have to be entered, so I'm going to enter it. Salaries 184,000, and then from there we check what else do we have. Salaries has already been used, we have ticked it. We then have a telephone for 17,500. So I'm going to include that telephone here. So I'm going to say telephone, and then it's 17,500. Let me check if our information is correct. So definitely correct. Then we then have stationery for 23,200. So we'll enter that stationery here, stationery for 23,200. And then next we go to the next one. We have insurance for 44,000. So under insurance, we have not been, it has not been entered for us, so we'll enter it. So our insurance is 44,000, and then you are done with this. Next we have interest on loan for 14,000. So interest on loan, remember, it is a finance cost, so we'll come here and say under interest expense we have 14,000. okay, and then from there we can move to the next one. We have discount allowed 3,800. So I'll enter it under operating expenses. We'll have discount allowed, and then our answer is 3,800. okay, and then once we are done with this, we will proceed with the information. We have bank charges for 2.3. so I'm going to say bank charges, and then our answer is 2,300. So once we are done with that, we are only left with dealing with the adjustment and their effects. Now it's very important for you to make sure that you know where to insert everything. okay, now once we are done with entering the information, the next part is that we should go to the adjustment. The next part says that here, the first adjustment says that no entry was made for a credit note. Now remember, whenever a credit note is issued, it means that there are returns by debtors. okay, so the saying no credit note was made for a credit note issued to a debtor do for stock returned. When a debtor returns stock, it is mostly because they are not satisfied, okay, or maybe we oversold to them. But in this case, this person returned stock probably because the stock was defective. Now when stock is returned, 4 accounts are affected. We have debtors allowance. We must be able to identify, okay, debtors allowance. We have trading debtors allowance, and then we also have debtors control. Remember, these ones are affected by the selling price. And then we'd have trading stock, and then we'd also have cost of sales. okay, now we starting with the selling price. When a debtor returns things, our debtors allowance is going to increase, and then when a debtor returns things also, our debtors control is going to decrease. Why? Because that person will no longer owes us. And then in terms of trading stock, when a debtor returns stock, our trading stock is going to increase, and then the cost of sales is going to decrease, because remember, we had recorded that our cost of sales increased, but then when a debtor returns back that stock, cost of sales then goes down and trading stock increases. Now our trading stock from the trial balance is based on the information. Our trading stock from the trial balance is 123,400. 123,400. Now remember guys, we said that a debtor is bringing back stock, so we must look for the cost price here. okay, remember they gave us the profit markup. So if we say 4,500, maybe let me bring my calculator down so that you guys can be able to see it. So if we say 4,500 multiplied by 100 divide by 150, it is going to give us 3,000. So meaning that our cost price here is equals to 3,000. So now our trading stock is increased by 3,000. okay, this will come in handy for us when we do our trading stock deficit or surplus calculation. So this trading stock is for the record. So we are saying that 123,400 plus 3,000, it is giving us 126,000 400, so we'd have that 126,400 here. When we do fiscal stock count, we are expecting to get 126,400, but remember we said that cost of sales must be decreased, so it means that we are going to go to our records and decrease cost of sales by 3,000. Okay, so say subtract 3,000, and then we must also remember that our debtors allowance also increases, and the more debtors allowance increases, the more your sales go down. So we'll also have to subtract 4,500 under our sales so that we can get the correct net sales. Now after this, what we need to do is to make sure that we check the next transaction that is going to talk to us about the fiscal stock on hand. Here they're saying that on the last day of the financial year, a fiscal stock taking revealed the following: trading stock amounted to 118,250. So you can already see that there's a shortage here. We were expecting to get 126,400. We are actually getting 118,250. So it means that there is a shortage. So when you show your workings for that shortage, you are going to do it like this. You are going to say trading stock deficit. Remember, deficit means shortage, and then you open two brackets, 123,400 plus the 3,000 of the stock that is brought back, and then you minus 118,000. I think it's, let me just check. So you subtract 118,250. Okay, 118,250, and then it is going to give you your trading stock, remember, plus 3,000, and then you subtract 118,250. It is giving you 8,150. This 8,150 is our trading stock deficit, and then we are done with that transaction. Next, the second part of the transaction says that we have stationery on hand for 1,050. So it means that this 1,050 must be subtracted on our stationery. So we would say minus 1,050, and then we will go to the next adjustment. Next adjustment says that a debtor T Mkwabani, who owes 950, must be written off as a recoverable. Remember, I said once you write off someone, it's a plus to bad debts, right? It's a plus to your bad debts, and then a minus to your debtors control. This will work when you do your balance sheet also, so it will help you to be able to know how to interpret this. So in this case, we are only dealing with the income statement, so it means that our bad debts will increase by 950. So I'm going to look for the account for bad debts, and then I'm going to say where is it? I'm going to say plus 950. Okay, then we can go to the next transaction. The next transaction says the telephone account for February 2023 has been received but not yet paid. In other words, it means that we are owing. So if we are owing, it means it is an accrued expense. An accrued expense is a liability, so we are supposed to increase our telephone account by 2,450. So we are going to go to telephone and then say plus I think it's 2,450. So we'll say plus 2,450, and then you are done with this transaction. Next one, they're saying that a debtor settled their account after 30 days. Very important for us to identify that this is after 30 days. So in other words, once it is after, they don't qualify for discount. They can't get discount after because they paid after 30 days. So here they're saying a discount of 300 was given in error, so they made a mistake, and they're saying that this error must be corrected. Now when you cancel the discount, you are going to minus in your discount allowed, and then you are going to plus in your debtors control. Okay, but in this case we are not doing balance sheet, so we are only focusing on the income statement. So it means that we are going to go to our discount allowed and say minus that 300. So discount allowed, we're going to say minus that 300 because we are canceling the discount. And then next adjustment says that an annual insurance premium of 10,800 was paid on 1 October 2020. Now remember, this annual premium, it means it was paid for 12 months. Now we must check how many months we supposed to cover. We were only supposed to cover October, November, December, January, February. So now we were only supposed to cover this 5 months. It means that out of a period of 12 months, we have overpaid by 7 months. So if you say 10,800 multiply by 7 divided by 12, it will give you the prepaid amount, which is 6,300. So therefore, prepaid amounts, remember in the income statement I showed you that you subtract them. So under insurance, we are going to say minus 6,300, and then we are done with this transaction. Next part, they are saying that a fixed deposit was invested on the 1st of March 2022 at Safe Bank. The interest was received for 9 months only. Provide for the outstanding interest. Now remember guys that our interest, we invested this for from the beginning of the year, so it means we were supposed to earn interest for the entire year. Now for you to be able to calculate our interest, what you can do, you can go to your information. You can see here that they're saying that the fixed deposit is 80,000, so it means we were supposed to earn interest on this 80,000. So we will use the add principle. So we'll say 80,000 multiply by 7 over 100 and then multiply by 3 over 12 because we only received interest for 9 months. Okay, so if we say 80,000 multiply by 7 divided by 100 and then multiply by 3 divided by 12, it is going to give us 1,400. So we are still owed 1,400 for our interest income. So we're going to go to interest income and then say plus 1,400, and then from there we can move to the next transaction. The next transaction says that the bank statement received on 28 February 2023 reflected the following. Now before we go to the transaction, remember guys that when you get your bank statement, there are some things that you will not be aware of until you get your bank statement. For example, if you were charged bank charges, you will not know until you get your bank statement. So it means that that information that you are going to get on your bank statement, you must make sure that you update your books using that information from the bank statement. Number one, here our bank statement is showing that we have bank charges for 400. Remember, this 400 was not recorded because we just got the statement. So we're going to go to our bank charges and then say plus 400, and then from there we go to the next part. The next part says that P. Smith, a debtor whose account was previously written off as irrecoverable, deposited 1,200 into the bank account. So now this person, we had written them as a bad debt, but now they have required, they have managed to get some money, so they are paying us. So when they pay us, we would have bad debt recovered because now we have recovered discount received here was recorded, so I'm going to erase it and include bad debt recovered. Okay, so remember that discount received was 3,100, so I'm going to put it here, that 3,100 here. So remember the account for that transaction is bad debts recovered, and then we would say 1,200. Okay, and then next, when we go to our information, they're saying that interest on current account. Very important for us to remember that our current account must be checked whether it's on the debit or on the credit side. So let's check. Our current account, according to this, is favorable because it's on the debit side. So it means that 125, that 125 is an interest income. So we're going to go to our interest incomes and then say plus 125. Okay, and then once we are done with this, we will then go to the next transaction. The next transaction says that a spare office has been rented out to a tenant since 1 March 2022. So this person started to rent from us from the beginning of the year. Okay, and they're saying that the tenant has paid March 2023 rent in advance during February. So in other words, this person has paid us in advance, and obviously when they pay us in advance, it means that we should be able to deduct on our rent account, we should be able to deduct that extra amount received. And then here they're saying that we must note that the rent was increased by 1,350 from January. So meaning that the increase affected January, February, and March. So the increase affected 3 months. So we're going to say 1,350 multiplied by 3, it will give us 4,050. So we'll get the increase is 4,050. So now if we take that 179,550 and then we subtract 4,050 and then we divide by 13, it will tell us how much they were paying before the increase. So I'm going to do it here. So 179,550 minus 4,050, it is giving me 175,500. Then I divide it by 13, it is giving me 13,500. So before the rent was increased, they were paying 13,500. Remember, if it's increased and you're given the amount, you take it out. If it is a decrease, you add it back. Okay, so that 13,500 13,500 plus what is that amount, plus 1,350, it is giving us 14,850. So our rent income that must be subtracted is 14,850 here. So we're going to say these subtract 14,850, and then we are done with this. Okay, then the next transaction says that provide for depreciation of 40,500 for the year. So once they've given you that depreciation, you write it as it is, because they said they gave it to you. So would say depreciation, and then the answer for it is 40,500. You just take that information and transfer it to your books. Okay, and then next, they're saying that an employee has been omitted. When they say omitted, they means not included or recorded. Okay, an employee has been omitted from the salaries journal for February 2023. The details are as follows. Now here what's happening is that we have an employee who was not included in the February salaries journal, but the problem is they were supposed to be included. So now, because they were not included, we must include them so that our financial statement can have accuracy. So remember, I told you guys that our cost for on an employee is going to be a gross salary plus the contributions that we will do for them. So if you say 13,000, if you say 13,000 plus 6,000 of the deductions, it's going to give you 19,000. This 19,000, it is our gross salary. Okay, so on salaries we will say plus 19,000, and we would also say plus for the contribution, so that we can understand how much are the contributions. The contributions are 3,000, so that 3,000 will come here, and then from there we are done with all our adjustments. We just have to close off the information and then balance. Okay, so let's see, the ones that did not change, I'll write them as they are. Discount received remains 3,100. Bad debts recovered remains 1,200. And then when we look at our information for advertising, it did not change, so we'd have that 30,000. And then let's see what else did not change. Sorry, our interest expense is short for something for it to become 23,100. So if we say 23,100, we say minus 14,000, it is going to give us 9.1. So it means it was accrued by 9.1, but I'm not sure if they wanted us to get this, because they had already calculated it for us. So now what we need to do, we need to make sure that we close off this information, we close off our sales and all these accounts. So we are going to calculate then. So I'm going to bring my calculator somewhere in the middle so that I can be able to calculate and write at the same time. Okay, so let's see, 1,280,000 minus 12,400 and then subtract 4,500. It is giving us 1,263,100. So we got this 1,263,100, and then from there our cost of sales, we are going to say 640,000 minus 3,000. So let's see, 640,000 minus 3,000, it is giving us 637,000. So I'm going to put that 637,000 here, and then from there our gross profit will be this and 1,263,100 minus 637,000, it is giving us 626,100, and then from there we need to get the total of our rent income. So our rent income is going to be 179,550, subtract 14,850, it is giving us 164,700. So 164,700 plus this other two, so we're going to say 1,200 plus 164,700 and then also plus 3,100. It is giving us gross operating income of 169,000. So our gross operating income is 169,000. So our other operating income is 169,000. So our gross operating income, remember, is the sum of gross profit plus other operating income. So let's get that and see. So 626,100 and then plus 169,000, it is giving us 795,100. Okay, so let's see. 626,100 plus 169,000, it gave me 795,100. So let's close off our expenses then. 11,300 plus 950, it is giving us 12,250, and then 186,000 for salaries, 184,000 plus 19,000 and then plus 3,000, it is giving us 206,000. So the total here will be 206,000, and then from there we would say 17,500 plus 2,450, it is giving us 19,950. So let's see, 23,200 minus 1,050, it is giving us 22,150. And then let's see, when we say 44,000 minus 6.3, we're getting 37,700. Okay, and then next, when we say 3.8, 3,800 minus 300, it is giving us 3,500. And then next we can say 2.3 plus 400, so 2,300 2300 plus 400, it is giving us 2700. And then from there we need to make sure that we get our total operating expenses. However, we must also note that the answer should be put in bracket to show that we are paying for something. Okay, so we're going to add this. So 35,400 plus 30,000 plus 12,250, and then plus 206,000, and then plus 19,950, and then plus 22,150 plus 37,700, and then plus 3.5, and then plus 2.7 plus 8,150, and then plus 40,500. We are getting 418,300. So I'm going to put it here, 418,300. And then from this, guys, our operating profit is going to be 795,100 minus 418,300, which will give us 376,800. So we'd have operating profit as 376,800. And then from there we need to get the total of our operating interest income. So we're going to say 4.2 plus 1.4, and then also plus 125, which will give us 5,725. And then from there we are going to have profit before interest expense. So we will say 376,800 plus 5,725. It will give us 382,000 525. And then when we say this answer, we take this answer and say minus 23,100. We are going to get 359,425. So our net profit for the year is 359,425. Okay, now remember, guys, this is just me trying to summarize what I taught you in class when we were going through this project together. So please make sure that you also use this lesson to help you to remember what we've done. I hope that this will really contribute a lot towards helping you guys to make sure that you do well on your project. And remember, guys, we must really make it a point that we pass accounting. Okay, thank you so much, guys, for watching. If you want me to become your personal tutor, you're more than welcome to get in touch with me by using the details that are available on the description of this video. With that out of the way, may God richly, favorably bless you. Shalom.